Hi everybody, welcome. It's Andrew Mattner here. So just for our scheduled webinar on cash flow, we're obviously going through a pretty full-on time at the minute with coronavirus and the impacts on business. So I actually had this morning previously slated to run a workshop with a group of clients. And due to the social distancing rules, we had to postpone those sessions, which was unfortunate. But what it did create was a free morning where I could sit down with a few of you guys and go through and talk about managing cash flow in what is an interesting time. So thank you to everybody that's going to join in. I can see quite a few people popping in right now. For those of you guys that have already joined, down at the bottom of your screen, you'll see a Q&A little tab. If you click on that, you'll be able to ask questions throughout the session. I'll have them bobbing up on a screen alongside of me. Now I'll try and get to those as we go through the session, or alternatively address them at the end, or where they're perhaps a more complex question, we'll take them offline and we'll address them afterwards. But we'll try and get to those, to as many of those as we can. So, all right. So what we'll do is we'll crack in. I'm just going to share my screen with a presentation. And I'll just stop my video there. Anyway, I'll figure that out later. So today we're going to talk about obviously managing cash flow. It's obviously a challenging time for a lot of businesses at present. And I've been having a heap of conversations with clients and business colleagues and other accounting buddies of mine in terms of how we're dealing with some of these things as we go through. And so I thought it was really important that through this period that we give what is my view of the tools and things like that are available for you to manage what is your most precious resource at the minute. So so in terms of the things that I want to cover off today, there's probably 5 key areas that I want to go through. There is obviously the impact that we've seen from coronavirus so far. I think it's really important that we refresh and go back over the learnings from the GFC. The GFC is, probably through our lifetime, the only thing that's relatively close to what businesses are experiencing at present. And there was a lot of positive that ultimately came out of that crisis in terms of business improvement, business management and so on. So I want to recap on some of the learnings from that. I want to talk about common cash flow mistakes that I find people making. I want to revisit everyone's, I'll just call it working capital 101. So we go through and address and make sure everyone understands what their current working capital cycle is. That'll obviously be different for different businesses. And then I'll go through the 15, what I'll call the 15 must-do fixes or actions in the current environment. So what have we seen with COVID-19 in terms of the impact on business? There's been a lot of, there's obviously been a lot of government announcements. There's been a lot of media discussion around this. We've seen so much stuff on the news or in the papers regarding the impacts and what is happening. But some of the things that we've seen in terms of behaviour is, we've obviously got the social distancing policy, I'll call it, that's in place at the minute. That's having impacts and has seen, businesses like cafes, hotels, sporting clubs, physios, gyms, all those sort of things, shut down. Massage parlors, all sorts of stuff had been shut down. We've seen a lot of retail businesses shut down just simply because people aren't shopping. We've seen yesterday in Adelaide 2 major hotels decide that they're going to shut down as well, let alone the tourism and travel industry as well. So all those things on the back of those policies has also created challenges in relation to reduced business output. A lot of businesses have struggled in terms of getting access to some suitable staff to actually do what they need to do. Not that the staff aren't around, but where they're in quarantine or lockdown or social distancing or whatever it might be, they simply can't be at a lot of businesses to actually perform the tasks that need to be done to keep businesses moving. So as a result, there's been a loss of forward orders and bookings for work. I've had a number of clients that have literally seen their revenue gone from hundreds of thousands of dollars a month to $0 per month. We've seen the Aussie dollar collapse through 60 cents. I think we got below 55 at one point. It's back around 60 cents now. But obviously for people that were importing goods into Australia, that posed challenges. We've seen increased level in financially distressed customers. So I've had a number of clients just personally that are obviously struggling, that we've had to work through arrangements with them in terms of their advisory and accounting relationships to help support them financially. Now, a number of you business owners will actually have a similar story where you've got customers who are struggling and unable to pay their bills. And when you put all those things together, what we end up with is a cash flow nightmare. So what did we learn from the GFC? That's obviously 20 years ago now, but the reality is, well, not 20 years, 12 years ago, 2008. What we learned is that those that had a plan survived. There was a number of businesses that didn't get through the GFC, but those that had a clear plan, had an executable plan of key actions and activities at given points in time, got through the GFC and actually thrived then on the other side of that. So as we go through this crisis at the minute, if you haven't got a plan, it's very important that you get something in place immediately. Now, that might be a plan in terms of how you deal with your customers, how you deal with your suppliers, how you deal with your staff, how you might deal with a temporary shutdown, all those sort of things. We've obviously seen a lot of government stimulus at the minute, and there was a lot of government stimulus back when we went through the GFC. Now, those things helped, but they weren't the ultimate solution. As good as some of the incentives are that the government's offered and have available for businesses at the present, they're not going to be necessarily the difference between surviving and not surviving this scenario. So it's really important that you use the opportunities that exist with the government stimulus packages, but you don't rely on them to get you through. You need to take responsibility for your own business and getting through to the other side through your own business management practices. The other thing we saw was, the businesses that had strong leadership got through to the other side of GFC. I've had a number of conversations with business owners over the last couple of weeks where some have had a really clear picture and defined actions about what they're going to do and how they're going to behave and how they're going to act. And I've had other businesses that have been very wishy-washy, that, well, they might be here one day, they might be there somewhere else the next day, and they're going around in circles. And that's not only creating confusion for themselves, it's creating probably confusion for their customers, confusion for their staff. So the those business owners and leaders that have a plan and are prepared to follow that plan clearly and decisively will have the best opportunity to get through this current crisis. We saw a lot of new and innovative ways of doing business come out of the GFC. Now, that's the same for a lot of businesses at present. If you'd asked me 3 months ago whether all our team members would be working at home, would be having all our client meetings over a technology platform and things like that, well, I wouldn't have thought that, because we're a people business and we're used to dealing with people face to face. So we've seen a whole lot of new technology apps come up. We've seen things come up. Snapchat developed this house party app that people can have a social get together on their phones or technology. So we're seeing a whole lot of new ways of business coming out, and that's going to be one of the challenges as we go through this. Is how do we come up with a new way of dealing with your team, dealing with your customers, getting your product to market, and so on. And the other thing that, it's probably not so much a learning, but it's probably more just a factual outcome, is that once we got to the other side of GFC, business boomed. So, we're going to be locked away. We're going to be anxious to get out and do things once some of these lockdowns and isolation policies are relaxed. And those businesses that get through, have a war chest to scale back up again and get through that, I expect that the 12 months following the emergence from this current coronavirus crisis will actually be really strong and positive for quite a number of businesses. So I think there is a light at the end of the tunnel. We just need to get to the end of the tunnel. So how do we do that? And this is a quote from a gentleman by the name of Bill McGuinness, who's an author of a book, excellent book called Cash Rules. And as we work our way through this, his quote is, "Ignorance of cash flow dynamics kills more companies than fraud, fire, competition, technological obsolescence, or anything else. There are a few circumstances that can't be handled and recovered from if the key executive and managers haven't internalized a cash flow mindset and integrate it into their management lifestyle." So what that's saying is that the businesses that, and I think a classic example that is front of mind in the public domain at the minute is Virgin versus Qantas. Now, both of those businesses obviously operate in the travel industry and airlines, and for a long period of time through their business management process, Qantas have been very diligent about obviously managing their business in such a way that they've got a strong cash flow buffer. Virgin, on the other hand, haven't performed probably as well, and as a result, Virgin are currently asked for the government for a $1.4 billion bailout or security so that they can keep going, because they're worried that in somewhere between 3 and 6 months, they might run out of cash. Now, Qantas have a cash reserves that'll get them through to the other side of this crisis, and they'll have their team there, they'll have their equipment ready to go, they've got a cash reserve ready to scale up again, and they'll get through this. So as soon as everybody's prepared to go and travel again, they're best placed to take advantage of the situation and perform in whatever the new business world looks like. So for me, there is four key pillars to a strong business. One is having a strong team. 2 is having good systems and processes. 3 is having really clear infrastructure and well-performing infrastructure in place. And the 4th one is to make sure that you got your financial systems and your cash flow position all very solid. Now, in terms of this, if you've got those 4 things, you'll be okay. But if you don't have any of those things in place, and the key one that is getting hurt at the minute has been people's cash flow, it will be a struggle to scale up and get to the other side of this crisis. So what are some of the cash flow mistakes that I see people making? The first one is indecision. You know, do I stand down my staff? Do I cut that expense? Do I speak to the bank? You know, do I undertake a marketing program to generate more sales? Having indecision around any of those key actions is critical. What we've seen is this coronavirus and the evolution of this and the shutdowns and the government policy is moving so fast. And so therefore, making clear decisions and moving on with certain actions in your business is critical. Poor financial systems. A number of clients or a number of businesses don't have great financial systems which they can use to identify their cash flow and their cash position at any given point in time. And when we're juggling cash week to week or day to day, those systems need to be clear and up to date so that you can understand what your position looks like. Also see many business owners mix their personal and business finances into a single bank account or into a single financial system or whatever it may be. That is, in this current environment, it creates unnecessary complexity, and especially when you need to deal with banks, especially when you need to provide information to the ATO or whatever it might be for certain incentives like the JobKeeper stimulus allowance. Having your personal and business finances not segregated, not run independently is a huge problem. Not knowing your numbers. Everyone needs to understand what their cash flow looks like at any given point in time. And if you're not across the data, it's impossible to be able to look forward and forecast where things are. So getting across your data is critical. Ignoring the relationship between receivables and payables. So receivables obviously relate to customers and the money they owe you. Payables being the money that you owe to your suppliers and other people. Now, often they are on different terms in terms of trading terms or whatever that might be. And you need to understand the dynamic of the two of those and how they impact on one another. Focusing on profit instead of cash flow. Now, what I'm saying here is, absolutely, and I'll talk about this in the 15 focus points. Focusing on profit is still very, very important, and we can't be doing stuff for nothing. We need to be clear of our break-even points. But what I'm going to say is that focusing on cash flow is actually more important than focusing on profit. So it's all well and good to go and sell your goods and services, but if you're not getting paid for them, then you're going to have a bigger problem. Forgetting about the ATO. This is everybody's debt to society. Now, I know the ATO have been very generous and accommodating so far in terms of extending people's payment arrangements or whatever it might be. But forgetting about your underlying debt in terms of GST or PAYG or whatever it might be, that won't go away. And eventually it needs to be paid, and you need to make sure that you've got that factored into your thinking and factored into your cash flow modeling. And the last one there is blissful credit. Now, a lot of people have been in an environment where we'll just go and get another credit card, or we'll just go to the bank and get a new loan or whatever it might be to get us through this. The reality in this environment, even though the government has come out and said that they're going to guarantee bank debts and we've got loan repayments and interest payments that have been parked with financiers for 6 months and things like that, going in and getting a whole lot of new debt is is not necessarily a great way to go in this environment. So I think you got to be really, really careful if you're relying on credit and new sources of funds to get you through the current environment. So working capital. This is, I'll call this working capital 101. This is the key for businesses to manage their cash flow. Now, the easiest way to describe that is the amount of working capital that you have is the amount of liquid assets available to you to, one, meet your business expenses and your payables, your creditors, and also to meet your short-term debt repayments. Now, your liquid assets are basically the cash you've got in your bank, your trade debtors, and your stock in your work in progress. And it's really important at this point in time that the amount of liquid assets that you've got exceed the amount of short-term liabilities and debt repayments that you have. Otherwise, we're going to get to the point where you're basically unable to pay your bills, and you're going to run into trouble. And notwithstanding that there is a 6-month moratorium for on insolvencies and things like that for financially distressed businesses, if you don't manage your working capital over this period, the reality is once the 6-month moratorium comes up, you won't get out the other side. And you need to make sure that we've got a war chest in place to be able to scale up when we get there. So how does people's cash move? And this is going to be a little bit different for different businesses. I know I had a look at the attendees in for the session today, and I know I've got some ag businesses that are in here. I've got some retail businesses that are in, some trade businesses, and some others. Basically, how your cash moves is going to be different for different people, and so for some, having sales or debtors in place isn't going to be relevant. Some or most of you will have creditors or wages over here, but the basic cycle on how your cash moves is you first of all, you have money in your bank. Now that could be a positive balance, it could be available credit on your overdraft, but you've got money there that's available. Then what happens is you spend that money and on creditors and purchases, wages, general expenses and things like that. And that's money basically going out of your bank account. For some of you, that money will go into stock or work in progress. Considering you might buy inventory for my rural clients at the minute. Well, they're about to start seeding in about a month's time. They're going to incur a whole lot of expenses on fertilizer and seed and spray and other bits and pieces to create a crop which creates basically stock or work in progress. Eventually, you turn that stock or work in progress into a sale, which becomes potentially a debtor, somebody who owes you money. And then eventually, when those people pay you for the goods and services that you sell, you put it back in the money back in your bank account. Now, that cycle all takes time, and that can probably be best explained by this little summary here. And in terms of this cycle, as I've said, this working capital cycle is going to be different for every single business, but I'll just use this as an example. So basically on day one, back here, we've got money in the bank and we order some stuff. We order some inventory. We've got trading terms with our suppliers. That means that, in 25 days time, we have to pay them for those goods. So effectively what we've done is we've bought 25 days of available cash flow from those suppliers. We then, do stuff with those suppliers. They go into stock, you create work in progress, and then at day 150, you sell those goods and you invoice your clients. Okay. And as we can see here, that between day 25 and day 150, we've got negative cash flow that we need to carry for 125 days. So we paid for our goods here, we sold them over here, and we got 125 days of negative cash flow until we make a sale. Then if you offer 45-day terms for your customers until they pay you, we've got another 45 days of negative cash flow between when you invoice them and when you get paid. So you can see in this scenario here, we've got 170 days of negative cash flow in relation to that particular transaction. Now, that like I said, every business is going to be different in terms of what that cycle looks like. But what it is critical that you understand what that looks like for you. You need to understand what your supply terms are and how far you can push it. You need to understand how far you're going to be out of pocket before you can sell what it is that you've either manufactured, put in your warehouse, or you've grown. And then the final bit here is you need to understand what your terms are and what conditions you're prepared to deal with your customers on before you're prepared to get paid. Now, so out of this, between day one and paying wage, 195 days, of which we've only bought back 25, that can be problematic. And so the first action that I really encourage everybody to go and figure out today is go away and figure out what your working capital cycle looks like, because narrowing those days between here and there is going to be one of the key aspects on getting through between now and the end of this pandemic. Like I said, feel free to ask any questions as we go through. So I've got one here from Sue. Sue, yes, I will email the slides at the end. So yep, so no, we're good with that. In terms of how to fix, these are my 15 fixes to manage your cash flow. The first, and I'll skip through these because I'll talk about each of them in more detail. One, have a look at your financial systems and get your data up to date, and I would say do that now. So whether you're running on Xero, MyOb, QuickBooks, Phoenix, whatever it might be, get your data up to date and understand what your position is at today. Okay. The second thing is run your business from your accounting system. Do not run it from your bank account. Your accounting system should have all your data in it, everything that, all the money that people owe you and all the money that you owe to others. Your bank account doesn't have that data. All it does is it gives you a snapshot at any given point in time. So sure, it will tell you how much available credit you've got between your limit and the money that's in your bank account, but it won't actually give you your real cash position. The third bit is, or the third key area is you need to create a cash flow plan. Some people might call it a cash flow budget, but in this time, it's a time of crisis, it's a plan. So you need to have a plan as to what this looks like, and you should be looking at that daily. Setting milestones for key actions, and I'll talk about that more. And as I said before, it's strong leadership and being decisive in terms of your actions is critical in this environment. Establish a daily monitoring process. I'll talk about that. Protecting your profit. So as I said before, profit is still important. You can't go out and give stuff away or do things at a loss, because that's eventually going to eat into your cash flow reserves. What you need to understand is you need to go back and revisit your break-even points in your business at different levels, and understanding what they are gives you flexibility to move and make better decisions. Avoid the discounting trap. I'll explain that as we go through. Daily invoicing, that will help shorten that working capital cycle. Diligent debt collection, we'll talk about that. Reduce all your surplus assets. So if you've got stock that's not moving, we've got to get rid of it. If you've got plant and equipment that's surplus to your needs, we've got to figure out a way to get rid of it. So getting rid of anything that's not creating cash flow for you, that's on your balance sheet, is important. Deleting all unnecessary expenditure. Now, the key word in here, well, there's two key words. One is all. The second one is unnecessary. So this is about understanding what you absolutely need to keep your business open and running. Stretch your payment terms. Now, that's going to be an interesting one, because you need to manage relationships in line with that, bearing in mind that in in this environment, businesses are all in this together. The more businesses that survive this crisis and get to the other side, the better off we're all going to be. And so it's really important that you stretch those as far as you can, but you're doing it in a respectful way, and you're doing it in an environment that doesn't actually, benefit you for the detriment of somebody else. Communication. So 13 and 14, communication with suppliers and communication with the bank. They are critical at this juncture. And the final bit there is get advice. I think it's really important to understand that you guys aren't going through this alone. And whether it's advice from us, whether it's advice from your bank manager, whether it's advice from your peers, trusted peers, whether it's advice from an industry body, whatever it might be, get advice and then apply it to your circumstances so that you can make decisions. So we're going to work through all 15 of those in some more detail. In relation to the financial systems, as I said, getting those up to date and accurate is critical. Now, your financial systems, they are at the center of everything's going on here. Like I said, whether it's Xero, Mob, QuickBooks, Phoenix, whatever it could be, that data and that information needs to be up to date. It needs to be brought up to date daily, and it needs to have all the information in there to give you a real position of your business. As I said, it's important that you don't muddy your financial system with your personal financial situation. If you need to go and apply for loans, if you need to go and apply for incentives with the ATO, if you need to get extensions on debts and things like that, having a financial picture as to what your profitability looks like, what your cash flow looks like, all those things are going to be really important in terms of whether somebody will support you in terms of a bank or anybody else, or whether they won't support you. So make sure you're reviewing that and getting all that information and up to date, and make sure you are diligent in doing that on a daily basis. I know there is, people think like that there is other priorities and things like that going on, but if you don't understand where your position is out of your financial system, then you are in all sorts of strife. The other thing that I said is obviously making sure your personal finances are separate from your business finances. Now, that means be really, really clear about what's going through your profit and loss. So separate out, your home expenses, separate out your kids' school fees, separate out your groceries and all those sort of things. You need to understand what your business looks like, and then you need to understand what your personal circumstances look like, because the two, whilst they're related, need to be dealt with in a different way. So be really clear on that as we go through. The next bit, as I said, is about creating a plan. Now, this is just an image that I downloaded off the internet, and you can see it's a US image, but the concept of this is very relevant. Now, where I would be at the minute is I wouldn't be doing monthly forecasts on these things at the minute. I'll be doing weekly. So looking out the next 13 weeks, what does your cash flow look like? What cash have we got coming in? What cash have we got going out? What operating expenses are we going to have play? And then down the bottom here, we've got all our, debt repayments, loan repayments, tax payments down the bottom here. We know where our end balance is and our surplus or deficit is. Everybody needs to have a cash flow plan in the current environment so that you can understand where your trigger points are for certain decisions. So I know a lot of people have said to me before, well, I don't know what's going to happen. I can't do a budget because it might be different in 4 weeks' time. Do you know what? That's exactly right. It could be different in 4 weeks, and it's exactly why you need a plan, because what you're going to do, or what you need to do, is you need to run a plan for different scenarios. You need to run a plan based on circumstances as they sit today. Then you need to do another plan and say, okay, what happens if my revenue or my collections drop by 50%? What does that do to my bank balance? What happens if it drops by 80%? What am I going to do? Because with that data, you can then establish different courses of action to and fast decisions to deal with the circumstances at that time. So again, I had one client that we were running through scenarios with and said, okay, if we drop 20%, this is what we need to do. If we drop 50%, this is what we need to do. And it was only by having the modeling out of his cash flow plan could we actually do that. And as a result, he's been able to basically navigate himself through the past 4 weeks based on certain trigger points that have happened over that period. So getting a cash flow plan is critical. If you're not sure how to do that, please sing out and drop us a line and we'll help you through that. Like I said, know your triggers. Be decisive at this current point in time. This is no time for indecisions. And look, the reality is that the decision you might make could be wrong, but making a wrong decision is better than making no decision. And this particular quote here, the right or wrong, make a decision. The road of life is paved with flat squirrels who couldn't make a decision. And you know, that's absolutely true in this environment. Sitting on your hands and doing nothing, or crossing your fingers and hoping that everything's going to be okay, is a bad strategy at this point in time. Okay, so you either need to commit to this path or commit to that path, but just be really clear about what that looks like and do it fast. And you need to do it for the benefit of yourself, for your own mental well-being. You need to do it for your team. You need to do it for your customers. You need to do it for your suppliers. So be really clear on what that looks like. We said about profit and the break-even point, and this is a little chart that I've actually drawn out of the workshop series that I run, and I haven't modified it, but simply you can see here that I've basically got 3 different levels of costs within the business here. We've got the low level costs, we've got medium level cost, and we've got a higher level cost. And you can see that as we go through here, your break-even point on your sales or your revenue is at different levels. Now, as you scale down your business or as you take any actions, you need to understand what your break-even point is at any given point of time along that sales line, so that you can work out which action to take. Because as soon as our sales, if we consider this top chart here, which is the highest level of costs, is if you're at level 3 costs and your sales are down here, every sale that you're making, you're losing money. Okay, so what you need to do is you then need to figure out, how do we get costs out of the system so that you don't blow up your cash reserves. So understanding what your break-even point is everywhere along those lines for the different costs is critical in being able to manage your working capital and your cash reserves as we move through this. If people there don't know how to calculate their break-even, please send us a note and we'll be able to talk you through that, you know, specifically for your business. The discounting trap. Again, this comes back to, I guess, preserving your profit and being aware of what that looks like. A lot of businesses, when they're seeking to provide cash flow or grow or whatever it might be, think the easiest thing that they can do at any given point in time is offer a discount off the price of their goods or services. Now, what I can say is that is a really, really dangerous strategy. And I'll give you this example, and basically at the top of this matrix here is we've got the gross profit on your goods or services, ranging between 10 and 50%, and the price discount between 1 and 20%. So you drop your price by 1%. What does that mean? You see here, I've got a orange band here that I've highlighted as an example. So if we just assume that a business makes 30% gross profit on every job that it does or every bit of stock that it sells, and we discount price by 10%, what happens here is you need to grow your level of sales by 50% to maintain your overall gross profit dollar amount. 50%. So if you're currently selling 100 units, you need to grow that to 150 units before you're not out of pocket. So it's really important to understand what your different triggers are, and by all means use this matrix as a guide. Understand what your gross profit is, and then say, okay, well, if I was to discount, my sales would need to grow by a certain amount to catch that up. So whilst it might be a strategy worth considering, I think it is very much a last resort strategy if we've got other options to get through than to start randomly discounting all your goods and services. Checklist for managing debtors. Look, the easiest way that I can describe this is it's your life and it's your rules. And I've had so many conversations with clients over the past 25 years where I've been advising them and consulting to them, is that when they're going into business, they just accept what is the standard. Well, the industry pays in 30 days from end of month from an invoice or whatever it might be. And they just accept that as okay. And my constant counsel is, well, that's not okay. It's your business and it's your rules. You make the rules. So I think that is the first thing to get in with that, is that, you know, as soon as you let somebody play outside of those rules, you're letting them set a different standard, and therefore the rules aren't valid. So the first thing that I would be saying to you in terms of managing your debtors at this time is be clear on your rules and enforce your rules. So little checklist here. Like I said, you make your rules and then you enforce them, because every time you don't enforce them, you tell your customer that it's okay to play by a different framework. Okay. If your payment terms are 14 days from invoice, then as soon as it's 14 days from invoice, you should be chasing that customer for payment, not accepting that they're going to pay you in 30 days from end of month when your terms are 14 days, because then they're not your rules. Okay. Update your collection process. You know, jumping to point 7 down here, the longer you wait, the harder it is. Your collection process needs to be up to date to make sure you're collecting your debtors every day, every week, whatever it might be. Set up auto reminders from your accounting system. Now, I mean, don't send statements, send auto reminders. And whether it be MYOB, Xero, QuickBooks, whatever it is, if you've sent out an invoice, you can set up automatic reminders in your system so that the client gets a gentle prompt a few days from the due date, gets another reminder a day before, gets another reminder on the day. So use those tools that are available to you within your accounting system. In these times, I think it makes sense to increase your payment options. So look at other ways for clients to pay you. Now, that might be that you have to offer credit card facilities, or if you offer standard merchant facilities like, you know, Visa card or debit cards, you know, you might have to increase your options to allow people to pay via Amex or via Diners or some other mechanism. Now, sure, that is going to increase your cost of that transaction in terms of the fees applicable to those cards, but you need to make it easy for people to pay you. If you're in professional services, see if there's some fee funding mechanisms that can be utilised. Scripts for collection calls. Not everybody likes collecting debts. It's not a fun job, but if you've got a script that you can follow or your team can follow to follow up your outstanding debts, it will be a lot easier. And as I said, the longer you wait, the harder it is to collect it. Suppliers. Suppliers, and probably the bank comes into this as well a bit. This is one circumstance where silence is not golden. We need to be communicating with each other, and if you need help or you need to extend your payment terms or whatever it might be, just don't assume that that's okay. And just don't not communicate with your suppliers or anybody else in relation to the money that you owe. If you need to stretch your payment terms out to 30 days or 60 days or whatever it might be, well, then that's fine. But be really transparent with what that looks like and come to an agreement with your suppliers that work for you and work for them. As I said earlier in the webinar, is that working together with everybody, your customers and your suppliers, is going to actually give more businesses the chance to get through the other side of this and for more jobs to be protected, and that's going to be a better outcome for everybody. So make sure that you're on the front foot with your communication. Dealing with banks. Now, this is an interesting one. I've always found that banks have two rules. Generally, when you need money, you can't have any. And the second rule is when you don't need money, you can have what you don't need. Now, that's challenging in this environment. And look, one of the positive things that came out of stimulus number 2 from the government was that they are going to guarantee up to 50% of a $250,000 loan facility. There's still details to come out in relation to how those funds are able to be obtained, and the banks are still establishing those products. But what you need to understand is that that money is just not going to be given out. The banks have been really clear that the lending is still subject to normal, banking criteria. So if they think you're a good customer now, look, you're probably a chance to get some more money. If they don't think you're a good bet now, they're not going to throw good money after bad just because the government's guaranteeing half of it. That's not going to be the case. So you need to make sure, like I said before, that your financial systems are up to date, that you've got a plan, that you've got a really clear story that you can present to the bank if you need to go to them and get money. Like I said, get on the front foot. So just like dealing with your customers, with your suppliers rather, you need to be on the front foot in terms of dealing with the bank, okay? Tell them if you're struggling or if there's a downturn. Speak to your relationship manager. Look at the current facilities that are available to, drop your interest rates or freeze payments or extend loan terms or whatever it might be. Now, what I do know is they are extremely busy dealing with this at the minute. And so therefore, getting in early and having a clear plan with them is going to be critical. And like I said, the longer you wait, the harder it is. You need to be a few weeks ahead of this game, because if you go to the bank and you finally realize that you're going to run out of cash next week, then it's going to be a lot harder. Okay, so get in early. The next bit is, or the final bit is, make sure you get advice. There is a lot of information out there. Ask the questions, get help, ask what the stimulus packages look like. Now, some of the stimulus packages are actually going to provide some cash flow help to a lot of businesses, to whether it be a rebate effectively on PAYG withholding, which will come in over the next 6 months, whether it's be the JobKeeper payment that'll help you keep paying your wages for your staff. So some of those things are going to obviously help you get through this. But in terms of managing, it can be confusing, and therefore, like I said, speak to us, speak to your bank manager, speak to your peers, whoever it might be. So they're the key 15 tips to get through this scenario. If anyone needs to contact us, like I said, Sue asked before, yes, we'll send out the slides. It's got our office number. A lot of you who are online will probably already have Kristen's and my mobile numbers. We've got the website. We're getting a lot of information going out on Facebook and LinkedIn and on social channels. So keep a lookout for that. We've already done 3 videos and numerous EDMs about stimulus packages and what they mean for business. So take a look at those resources and apply them where you can. So I'll just stop sharing there. Now, I'll just say, does anybody have any more questions that they want to throw up before I log off? Give you a couple seconds to type anything in if you. No? All right. Well, thank you everybody for, I know we got here, Fern. So how quickly can you apply for the job seeker support if you can? See your income drop? Well, you can register straight away, Fern, is the answer to that. So you can get onto the ATO site and do that now. So that's just a registration. You've just got to put in some basic details for that as you go through. If you see your income dropping, yep. So that's done. Marty, yes, I'll see you tomorrow. Tricia, best site for stimulus package updates. Look, there's stuff coming out on our EDMs, but probably in terms of the fact sheets and the data, probably the best site is the Treasury site. What I'll do after this is I'll just make a note. I'll just send you the link to the Treasury site, and there's a lot of stuff on there about the options and the fact sheets and how you can go about getting those things. So that's probably the best spot at the minute. Yeah, Fern, you can still register even if you're okay at the minute. Kerry, send us a link. Yeah, I can send a link to you as well. Link on the job seeker. So yeah, so I'll flick some stuff out with that at the minute. Actually, what we might do is after this, we might post on our Facebook page a couple of useful links that you guys can hunt down. Fern, if you need any more information, perhaps just drop Kristen or Christian a line, and they'll be able to answer that for you as you go in terms of that. So I think Kerry, yes, I'll send a link. The answer to that, Fern, what I'll say is we've got a video coming out today that probably answers that question. So just keep an eye out for that video that's coming out today that answers those questions about the directors and self-employed people getting access to job seekers. So the simple answer is yes, you should be able to. Cool. Sue, can a property owner pays and sells a wage? My understanding to that is yes, provided they meet certain conditions. So just in relation to the JobKeeper, what we need to be aware of with that package is that is still what I'll call a press release. There is no format in relation to the specific rules or conditions around that. So we've got a 2 or 3 page fact sheet and some other data. So in terms of property owners paying themselves a wage, what I will say is the answer to that is maybe, but let's watch that space as more detail and things like that come out in relation to that. Fern, on what platform? I'm not sure. Can you give me some more details on what platform you're referring to? So whether it's on the ATO platform, so the JobKeeper, if it refers back to that, that is you apply for that on the ATO site. If you just go ATO and then search JobKeeper, you can register. It'll take you to a screen to do that on there. Video, Facebook. Yeah, sorry. Yep. So Sue, yeah, so again, watch out for that video, Sue. That'll go on our Facebook and stuff as well. So company owners, yes, in certain areas, they'll be able to apply for it if they meet the conditions of the 30% drop as we go through. 30% drop in revenue. Will there be changes to super payments for paid to staff? So again, Kerry, what I would say with that is that's answered in our video today. So the answer to that is yes, and just watch this space as to exactly what that looks like. There is, if you're referring to the super payments for that relate to staff that are on JobKeeper, then yes, there will be changes, but otherwise, if it is just normal superannuation and your normal obligations, there is no change in that environment at this point. Okay, so keep paying your super as you would normally have to. There's been no announcements in relation to extensions. Fiona, what report do you think we should be pulling from Xero for JobKeeper turnover? Yeah, what I'll do, Fee, is I'll take that one offline and deal with that separate outside of this with you directly. Cool. All right. On that note then, what I will do is if anybody else has got any more questions, feel free to email or call us and we'll go through it specifically. So thanks very much for joining and we'll wrap it up there. Cheers.